So I'm here today with Matt Smith, who's the founder and CEO of SteelEye. Matt, welcome to the Fintech Files.
Thank you. Thanks for having me.
It's great to have you here. And we've got so many questions about the company, the exciting news you have. But let me start first by looking back and looking a little bit about your background. Can you tell us about what you were doing before SteelEye and what made you launch the company?
Yeah, sure. So I spent most of my career in financial markets technology. My most recent role, I was a senior product manager at a very large fintech firm running part of their regulatory and compliance product agenda. I was very interested and focused on the data components of the regulatory kind of challenges that financial firms were facing. Prior to that, I spent 8 years as the chief information officer for a global trading business. We're just short of $100 billion in trading activity, and we had operations all around the world. And as I was there, this business was growing dramatically. So I think when I began in 2008, they had done just around 24 billion in revenue and grew that to just short of 100 in about a 4-year period. Went from 6,000 people to 16,000 people. And in that growth, there was organic, there was acquisitional. I mean, there was all kinds of things happening there. But while this is going on, the global regulatory landscape started to evolve very fast. And the first real big impact that we saw was the Dodd-Frank regime coming out of the US, which required financial firms to trade or to report swap trading positions. And suddenly what financial firms were finding was they had to scramble to clean up data, make sure they had data that might have been missing, bring data sets together in order to meet this reporting regime that the regulators were very clear they would be very unforgiving about people missing this. And this was on the back of the financial crisis. Shortly thereafter, the European regulator came out with the EMIR, European Market Infrastructure Reporting Obligations, which again was even more expansive. And then we saw the behemoth, which is MiFID II coming, which really was quite unique in the sense that in the past, a lot of the trading businesses in the market could lean on the sell side to do a lot of the reporting and record keeping and transparency obligations on the behalf of the buy side. Suddenly the buy side had to do all these things, but it also was impacting firms that weren't in Europe. So if you wanted to participate in European markets, you had to do all these things that you were ill prepared for. So you had a lot to do in a very short period of time. And I think because people didn't really understand the regulation, they left it very late. So here's this like impending deadline that has huge amounts of data challenges as well as functional challenges financial firms were going to be hit with. So as this was happening, having been through it as a market practitioner, having lived through it for a brief period as a technology provider, there was an opportunity that I saw, which was if we could go through the process of cleansing the data and solving the data problem for our clients, we could build meaningful things for them from a regulatory perspective that we could then help them consolidate vendors and systems and save money. But then they could actually leverage this data for things well beyond regulation.
All right. So yeah, just to understand a bit more. So typically the data that would be available to such firms, institutions and all types, it would be, I guess, a lot of data, but unstructured data?
It's both. So when we talk about unstructured data as it comes to regulation, this tends to be things like communication. So voice calls, emails, Bloomberg chats, instant messages, Slack, WhatsApp, WeChat, these types of things. But on its own, you can solve part of your regulatory challenges around communication, surveillance, and oversight and conduct oversight. But you really need to bring other data sets together in order to truly and comprehensively solve the broader data challenges. So this could be your trading and order activities. This could come from order management systems or trade execution platforms. But all the data points that you require to record under MiFID are very expansive. You need data from your CRM, so information on companies and people within those firms. That could be a phone number, it could be a legal entity identifier, it could be a MIC code, a BIC code, it could be a passport of an individual. You need your employees' data. You need reference data such as legal entity identifiers. You need instrument reference data. You need market data, so pricing information. You need news in order to detect things like insider dealing. There's several different elements to that, but knowing what's going on in the market is key. And then by having that all in one place, you can start to solve an array of challenges. But it's very expansive in terms of the data sets that are truly required to conform to international regulation.
Understood. And just again, to go back to the incredible expansion of regulation, I just see on your website, Dodd-Frank, UCITS, EMIR, I don't know many of them. I know MiFID, for example, and it says it's a 30,000 paragraph regulation. So clearly this is something that can be overwhelming for firms. And also naturally, you mentioned how they onboarded late, and I remember seeing just recently something about LIBOR transition and things like that, and how no one is starting to transition. I guess, is this something that well, perhaps a natural behavior in face of regulation? You don't fully embrace it. You firms wait for it and then go for it when they really have to.
Well, I mean, as you say, 30,000 pages of regulation, I struggle to think that anybody would really master that. I've met a few people who have, but very few. What you find is a lot of people looking for guidance and advice. Now, there's specialist consultancy firms out there who spend their life breaking these things apart and really understanding the key components of what financial firms need to be aware of in order to conform. When you look at regulation, it really is broken into components, right? So there's understanding and interpreting the regulation. There's imposing policies within your organization, which is more about the framework and the structure. And then there's the systematic implementation of the capabilities in order to meet those obligations. And then forward-looking, there's the oversight and operations of your compliance regime. So it's long-reaching and very impactful, very costly, both from a time perspective, a resource perspective, and a technology perspective. So as we work with financial firms, just given the business we're in, we obviously have to be experts at what we solve for. We have to really understand it, not just today, but we need to predict what's coming and be able to adapt our solutions, advisory, and capabilities to future components that might come into fruition or change. We may even see some deregulation on the back of COVID. What we find, I've been recently talking with partners who are in the consultancy and advisory business, and they express frustrations that technology providers are taking business from them. And they're doing that because we actually, as a solution provider, have to really understand regulation, in some cases better than anyone, in order to build the solutions that we build and to be able to support our clients. And what I see is some of the consultancy firms who specialize in regulation, even if they've only got a subdivision specialized in regulation, wanting or trying to build software. And I always say to them, like, why would you build software? Like, I don't want to be an advisory company. You shouldn't want to be a technology company. Maybe you do, but it's a very unique business. It's very challenging. And I think as a result, what you're starting to see is a bit of a change in the way market practitioners engage with consultants and technology companies. I don't have any aspirations of building a big consultancy practice at SteelEye. So we do look to partner with experts. We see things like, if you remember that kind of list of 4 stages, so it's like interpreting regulation, imposing policy, implementing systems, and then operating. The operating bit, that's not where I really want to be spending time. So what I'm saying to the advisory companies is a lot of firms need ongoing help. If you are reporting under EMIR or MiFID, and you've had one of our validation checks fail, it comes back and it says there's an issue with it. It's not really SteelEye's business to sit there and tell you exactly why. The system will tell you why, but if you need to go back and understand better and make changes, you should be leaning on more operational experts. And I think as the world starts to understand these different changes, I think we'll get tighter and better at it, and we'll understand where all of us play within the market.
Thanks, Matt. And I want to go further into this and discuss how people come into the SteelEye world. But before that, I just want to mention or ask a question about regulation in general, because we seem to be saying that well, people have to deal with it. But the conversation that I had with other people in the podcast, including Alok Kadvani, who is one investor in SteelEye, is that regulators are actually having very constructive conversations. They're actually very aware of the technology and things like that. So regulators are also, would you say regulators are, well, they're bringing compliance, people have to deal with it, but they're partnering with the market, right?
As best they can. As a regulator, you have to be independent of anything, right? So you need to be taking an independent view at every level. So what we find in the technology space, it means that you never will get any form of endorsement from a regulator saying these guys are good.
Of course, yeah.
And I get that. That's fair. Now we spend a lot of time with the FCA, AMF, ESMA, and we do this largely so that they're aware. And it's only when you get to a certain point that they come to you. It's almost impossible to go to them and say, "Hey, check out what we're doing." They're just too busy, right?
Sure.
And we tried that in the early days, like, "Hey, FCA, take a look at what we're doing. It's really interesting and actually will help reduce costs and simplify regulatory conformity for market practitioners. Given you're imposing all this regulation, you should be embracing us." But they get loads of us coming at them. So they have to figure out how to filter. And what ends up happening at some point, they'll hear about your platform enough from market practitioners who they go and either they're doing an audit or they reach out, the participant reaches out saying, "This is who I'm using." And then they call you in, and then you get brought into a room. And I mean, we spent half a day with all the heads of supervision at the FCA going through our platform. And in the end, I said to the group, like, so if you hit a market practitioner who's using SteelEye, are you satisfied that they've solved these different things, of which is about 5? And they kind of looked at me and they said, "Yes, but it's got to be tuned." And that's very right? So we provide a platform. Now that tuning really shouldn't be SteelEye teaching the clients how to tune that, because we're just going to tell you what we think you should be working with specialist advisories, your internal compliance teams, etc. But they do engage. I think they need to do a better job of not endorsing firms, but almost like, I don't want to say certification, but just saying, if this platform, just what they said to me, right? This platform does everything you need. And if you have it, you've got the right foundation, but you have to do these other things around tuning it with the caveat. But just then, because it's very hard, if the regulators struggle to sift through it, how do you think it is for a market practitioner trying to understand all these different things? We provide a basket of solutions. It's really in kind of 3 categories, but there's a lot of subcategories to it. So communication, surveillance, and record keeping and analytics. And there's a whole ecosystem of competitive vendors in that space and challenges and technology and evolution. Trade surveillance, which is market abuse detection, TCA, transactional cost analysis, best execution, trade surveillance and analysis, and then regulatory reporting. And there's a bunch of these things like MiFID and EMIR. And again, there's a whole bunch of competitors. It's very hard as a practitioner when you're having to solve all these different things to figure it out. And it's almost like when we walk in, we say, actually, you can get it all in one place. Here it is. At first, they're non-believers, but as soon as they actually see it, then they realize, wow, this does work. And when SteelEye normalizes your data, let's say you buy our products for MiFID reporting or for market abuse detection, we only have to normalize your data in its entirety once. And once we've done that, it's a standardized canonical taxonomy of data that can be used for all these things. So the beauty of what we do is once you've been onboarded for one thing, have a look at our other stuff, and it just works because we've done the onboarding. And that way our clients start to just slowly transition and we become a comprehensive ecosystem for compliance. Even more importantly, though, actually this data is really meaningful for businesses way beyond regulation. And we give them access to it via APIs. So never feel that we're holding your data hostage. I used to hate that as a chief information officer. You have access to it. We have a whole kind of bespoke reporting suite where you can create KPI and management reports on anything in the platform using drag and drop capabilities. I mean, that in itself is quite a game-changing thing for financial firms. And we've been able to create that on the back of solving their regulatory challenges.
And it goes, yeah, that's exactly it. And I was talking to someone about post-trade data, how it's a big opportunity for many firms, custodians in particular, who have so much, and without even mentioning the regulatory side of things. So it's a big opportunity, but we have to deal with all that. But before I just want to take a little step back and just to try to really understand how it works for a client that you bring in the SteelEye world. So maybe we can take, I don't know, a hypothetical example or whatever you want
Yeah.
in terms of getting started and what then getting that benefit, that data that you mentioned.
Yeah, I mean, it really is a journey, right? So recently we've been offering a 90-day free trial of our communication surveillance platform for Microsoft email and Bloomberg. We do a whole bunch of communication platforms, but we just offer those two because they're kind of easy for us to integrate, and they really are, right? Like, so to integrate Bloomberg or Microsoft email, we can do that literally in minutes, providing the client has access to the data. There's standard protocols and data formats, and you don't have to worry about data being missing because it's just there. We have, on the communication side, we have more challenges with things like voice, because if you're using like an obscure voice recording solution, usually the challenge is getting it out of that platform. The bigger ones are usually a lot more open, and we partner with them anyways, and we can natively integrate those things. Orders and trades, we've done well over 120 order management and trade execution platforms. Once we've normalized it to our standardized model, then we don't really have to do anything for integration. And then things like CRM data, we connect to Salesforce and Microsoft Dynamics, and everybody's like, oh, that's cool. Well, every version of Salesforce is different by design, right? Like, it's designed to be different. So we have to go through that. So what we do before we onboard, not on the communication side necessarily, more on the trade side and CRM side, is we go through an audit, and we'll review your data with you. If we haven't seen the data platform, or the trading or OMS platform, we'll go through that and look for any issues. We look at how we can extract things. And then we go through a mapping process. And we tie things back to things like ISIN and like market data and instrument and news and all that stuff together. And it can be very fast. We've onboarded clients in less than a week with complex environments, just because they're using things like Charles River or Murex or Bloomberg or Fidessa. And those formats rarely change, so they're quite easy to integrate, Aladdin, that type of thing. But where we hit more unique ones, it can be a bit more challenging. But what we've become is experts at this, and the more kind of we map, the better we are. We think of the way we approach this through kind of process and engagement, systems. So we've got a lot of systematic control capabilities. We do huge amounts of data validation and verification at all levels, both when we're onboarding daily, through the reporting processes. We do a whole bunch of validation checks. And we're constantly analyzing, systematically and automatically analyzing data to look for issues. And then as time goes on, we become a lot more intuitive systematically about not just alerting you about there's an issue, but also what that issue is, very specifically, but very intuitively. So it's very visual, and we tell you a story about data as opposed to just say, computer says no.
I think we've understood your offer and the uniqueness of it. And I guess it's a compelling offer. Yet, my guess is, just because you are in the field you are, I would assume that the customer journey or onboarding customers could be quite challenging and taking a lot of the multiple stakeholders. Can you tell us a bit about that, the main marketing challenge that you may face?
Well, I mean, there's the marketing side, and then there's the actual onboarding. I think as of yesterday, we signed up our 65th client, and we've only been selling since November, December of 2017. We haven't been around all that long, and we're signing up maybe 5-6 clients a month right now, and selling 3 different things, right? So some of them are taking it all or parts of it. So it is complex. And we have to get better at it. We do get better at it. We hire more people. We become more intuitive. In terms of the journey of engaging with clients, like from a marketing perspective, very, very early on, when we started the business, and this is kind of mid 2017, we were planning to sell into a regulation that was coming into effect in January 2018, right? So we had 6 months to find investors, build a product, get ourselves into the market, start selling. I look back on it now, and it seems so realistic at the time, but boy, that must have been an impossible hurdle. We got over it just at various times, and there's a lot in that. But on the marketing side, like, brand awareness was key. So working with PR firms was key. Trust is key. The things that our clients do with us is incredibly sensitive. It's incredibly important. and they have to trust us. Now, part of that is we spend a huge amount of time and effort and money on a robust security infrastructure and platform and capabilities and processes and all these different things. And then part of it is, we build ourselves out as the leader, the thought leaders, which we are, that we understand this stuff better than almost anyone. So when our clients engage with us, the initial kind of engagement is about ensuring they have confidence that we know what we're talking about. Because if we don't, and we can't instill that confidence, then before we even get to a meaningful conversation, we've lost out. Many times, certainly in the early days, we were playing against the big providers, right? The Bloombergs and the Reuters and the NASDAQs, these big, giant fintech firms who've been around for ages, and people will buy those products in many cases, certainly with something so risky, because it's considered safe. Now, whether that's true or not, I think is debatable. Well, certainly is debatable. But that was a thing that we had to play into. The more our brand is becoming a trusted, known brand in the industry, the easier those conversations are. We align with some great partners. But it does require a lot of work getting our name out there and educating the market as to why they should believe that we can solve these problems for them. And why should they trust us? And I think we've done a great job as a testament to not just our marketing team, but the entire organization at SteelEye.
No, sure. I mean, it's amazing to see that amount of trust, that speed of onboarding clients for a 3-year-old, yes.
Coming up to 3 in October, yeah.
Okay, so well, anyway, so something like that. In such a the most sensitive, the most delicate area of banking, which in itself is a very conservative, sensitive sector. So well done. And obviously it has to do with the product, education, just what you were mentioning, but the branding and the rest of the thing also helps. So I want to touch a bit on that. And to me, the branding stands out just as I looked at it, because it's SteelEye. It's not a funny name, and the colors and all that. How much thought and what was the process through that, and how does it help eventually to move the needle along?
Yeah, I mean, there's a long journey in all that in terms of branding and marketing. We've made a mistake along the way. SteelEye as a name really represents steel being the safe in which we store your information, and eye being the insights and vision we give you from the data that we store within that platform. And that's really where the name was derived from. In the early days, we worked out a kind of an initial brand, which was really kind of a safe brand. And the marketing people that we had originally worked with really disliked that safeness that we were going with, which was just like a very subtle white and blue color scheme, and just solid, trusting. As time went on and we built the product and we had a brand coming out of the product, what we did was start to align our colors and our marketing material with the system. So these are call outs directly from the SteelEye platform. And that's really kind of where we are today with the way we like to present ourselves. But we are conservative. We are not like a funky B2B startup or B2C startup, and trying to impress people with being kind of edgy. We are a safe, reliable firm, and we will continue to be, and we'll continue to represent ourselves as that.
Absolutely. That's why I love it so much. And it's actually refreshing that you don't follow the hype that, very many people in the B2B space are also inclined to do. And I think it's great. I think it really works. Just a couple more, one more question in terms of marketing, because again, it's interesting that you must have had some interesting thoughts put behind, let's say the marketing mix, because you have to be an advisor. You have your core product, and at the same time you have this 3 trial acquisition model, which is perhaps more akin to the B2C side. So was it hard to put all this together as a product, because you're doing all this? There's the core product, there's the acquisition, free trial, and then there's all the advisory, which I don't know if it's part of a product or it's more like a service that you offer on top.
Well, the advisory stuff we don't charge for. We do charge a very nominal amount for integration. We don't believe in making money on integration or human capital. Like, we're a software company, we make our margin on recurring revenues from software. When you kind of look at the bigger scheme of things, as you start to evolve the direction of the company, what you really want to focus on is what you're good at. And part of that is making sure that the world knows that, because we do have some incredibly smart people and some of the world leading experts in the things that we do in the organization. So we spend a lot of time getting out in the market and talking. We hold our own event. It's called Regs and Eggs, and we usually do that twice a year. One is in a restaurant in Mayfair where we'll have kind of 50, 60 people. And then we do our flagship one, which has always been at the Houses of Parliament. And I think we've done maybe 5 or 6 of these. And we did a virtual one during COVID, which was very, very well attended. And if you've ever been to one of these things, it's never about SteelEye. So while you're there, you'll never see a SteelEye screen. You'll never hear anybody from my firm talking about SteelEye. We invite industry leaders, thought leaders from places like EY and the London Stock Exchange and various Alpha FMC, Baringa, who are experts at components of interesting things, material things that are relevant, and they talk. And they don't talk about their businesses, they just talk about industry trends. So you can go to one of these events for half a day. We never charge for it, and you'll walk away and you'll have learned something, and probably quite a lot. I always learn a huge amount of these things. And we do that, and we don't charge for it because we believe in just being part of that ecosystem of educating and sharing, and we'll always continue to do that. I think when it comes to marketing for us, having the challenge of selling 3 different products, you're always competing against 3 different markets. And I think I underestimated the complexity of that and the sophistication that's required in order to do that effectively. So as an example, we just recently saw the CME pull out of the Nexabide reporting business. So suddenly there's hundreds of firms looking for regulatory reporting, and we're competing against firms who are really aggressively coming after us. So like things like putting Google ads against us. So like when you search for SteelEye reporting, you get them. And I didn't know about all this stuff in the early days, so we're having to kind of fight back there. Meanwhile, we're doing really well on the trade surveillance side of things, replacing a lot of very traditional providers that have just been charging obscene amounts of money. We're coming in with better technology, better solutions, more relevant, more straightforward to use. So just organically, we're winning a lot of business there. While all this is happening, we had just invested in, as you described, the communications campaign, where we're competing against a whole different ecosystem. So you're kind of always fighting these 3 different battles. And then what you start noticing is that actually the competition starts to take notice. So we started seeing our competitors who realized the fact that we offer these 3 things in one are losing to us all over the place, that they need to adapt. Right now, you adapt in one of 2 ways in this component. You either somehow build the 3 things that we built, or 2 of the 3 things that we built, or you partner. So we've seen a lot of big providers, traditional players starting to partner with each other. Like one communication surveillance and trade surveillance platform came together to offer a combined platform. A trade surveillance and a trade reporting competitor came together to try to compete. And at first you're kind of like, well, okay, this is going to get harder. What we then realize is, unfortunately for them, the best you can do when you're 2 different companies coming together is provide effectively a superficial integration with a superficial kind of go-to-market strategy, because your technologies aren't really integrated. And your marketing campaigns are still competing in some ways, and your sales campaigns and agendas are competing in some ways. And the beauty of what we had and why we're so successful right now is we started from a clean sheet, and we focused on data. We spent years focusing on data. And this was way back when I was a market practitioner, through to my time at the fintech firm, but really focusing on, if I were to get the master data platform that solves all of these regulatory things, what would be in it? And we built that. So things really work together, like being able to really assess news, communications, transactional activities, market price, market movement, things like TWAP, and we have it all there, and it's all living and breathing as one thing. And I know there's nobody else in the market that has that right now. Now that will change. I'm not arrogant, and and there's no wizardry in what we do, but we've got the march right now, and we just have to continue to move as fast as we can.
Amazing. No, and I'd love to talk more about marketing. It is my favorite subject, but I will instead try to keep it tidy and wrap it up. But before that, I do want to have a few questions about the future, your outlook, and also to see what difference it means to a client, what opportunities it open once they've been onboarded, once they've had access to this data. And we've been talking about compliance, but you mentioned it's more than that. It's having access to all the data, and I guess that opens a lot of opportunities for them.
Yeah, I mean, look, I've gone around the world talking in auditoriums and one-on-one with financial firms about regulation, and the thing I used to say in the lead up to MiFID II, so you'd be in an auditorium, there'd be 200-300 people there. You'd ask, how many of you have built a data warehouse? All financial firms. How many of you built a data warehouse? And invariably, you'd probably get 10% of the room put their hand up. Realistically, it was a lot more because a lot of firms, almost all firms have tried that. And then you say, keep your hand up if you succeeded in building that. And maybe you get 2 or 3 hands at the back of the room. Right? So most firms have tried to build these data lakes, data warehouses, and have failed. And they've usually failed because what they've done is focus on a business problem, solve that business problem, but the data then is not usable for anything else, and then it just becomes a very expensive database for a particular business problem. And what we knew is if you can solve the data problem right, not thinking about applications or use cases, then it becomes meaningful. So our clients, whether they know it or not, and some get it right before you even sign contracts, they understand it, but our clients actually receive from SteelEye one of the most populated, comprehensive data lakes their businesses could ever have wanted. You can use that data for risk management information, feeding up and downstream into ledgers, client portals. I mean, it's endless what you can do with this data. And you've got it all there in a standardized taxonomy, a standardized canonical model. We give you that model. You know what it looks like. You can build applications on our platform. So we have clients that can actually go in using our APIs and build applications on data that would otherwise be sat there dormant. So let's just look at this, right? So all these firms that are out buying regulatory reporting tools, they go through this painful exercise of mapping data in order to report and pump it through this thing that's going to do some validations and feed it to a regulator. You get no value from that other than you solve that reporting thing. Well, we do that. But then you actually get all the history and the data, and you can do whatever you want with it. And that's the big distinguisher.
Let's now just a bit more about first your advice for any particular tips in general for other fintech entrepreneurs for your journey.
Yeah, I mean, it's hard. It's I don't envy anybody who's just getting into it. I think those of us who've been, I mean, I haven't been around that long, but who've been a little bit battle worn, you'll understand the sleepless nights and hard work. It's challenging. Look for advisors, look for partners. Anything you can do to have people that can support you on the journey will obviously make things better. I think the big thing for people going into this industry is you have to know what you're trading into. Like, how are you going to do that? You can build these things organically. You can do it through investment from venture capital or strategic investors. But mapping your journey and understanding that journey early on is critical.
Okay, since you mentioned it, I have to ask because I had, as I mentioned, Alok Advani from 8 Roads, who's a strategic investor in your firm. Do you want to tell us a little bit more about how they help and how you work together?
Yeah, I mean, there's so many different types of investors out there and different ways for young budding fintechs to raise capital to support their businesses. And we pretty much had it all. So we started off raising through the UK investment schemes, EIS, and things like that, which attract high net worth investors. We brought in an early stage venture capital company who's been just a great partner for us. Illuminate Financial with Mark Whitcroft, Mark Beeston, Alexander Ross. And then following that, we took some investment from a big fintech strategic investor. So we have them on the cap table. And then most recently, we brought on the 8 Roads Group under Alok Advani. As we were raising in this last round, you kind of get to a point where you have a little bit more luxury, where we did have a few options. For me, I wanted a partner in this last round that was really aligned to my vision. I'm an old corporate guy, so I'm used to the corporate way of doing things. It's a little bit slower, it's a little bit more risk adverse, a little bit more mature, and I really saw those kind of things in the Eight Roads team. They certainly saw my vision as to where the company is going to be in kind of 2, 3, 4, 5 years, and I felt very comfortably that they could help me on that journey. I mean, there's various different things in that, from where you want valuation of the business to be, where you want to go as part of your organic growth, like international expansion and things like that, where you want to go as part of your non-organic growth. So, I really believe that part of our journey will be through acquisition. And we want to, at the right moment, start leading some of the consolidation in the market. And having partners that support you on that and believe in that as part of your path is critical. So I think, I lucked out having them. But having said that, I've met hundreds and hundreds of venture capitalists over the years, and that's part of my journey. And most of them are amazing and really bring value. They're great people. They want you to succeed, even those who haven't invested in me. And bear in mind, hundreds of them have closed the door on me as well. But I still work very, very closely with them, and we catch up all the time, and they've given me great advice and support. Yeah.
Wonderful. And therefore, I still have to ask about how do you see, you mentioned consolidation. How do you see this ecosystem evolving in the coming years or decades?
Yeah, I mean, so like on the back of the financial crisis, a lot of very experienced professionals from financial firms were looking for something different, right? Like myself, I ended up moving to Asia, something I'd always wanted to do, and that was where I was the chief information officer of the large trading company. Others went out and started companies, and what you're seeing more and more of is very talented people who've got a lot of experience in industry, coming up with ideas about problems that need to be solved for, and a whole investment ecosystem that's looking for ways to support that. London, as an example, has become one of the world leading hubs for fintech. And it is that, right? So you've got a lot of people coming out of the banks and the financial firms, a lot of money and capital around wanting to support things. So as a result, there's hundreds and hundreds, thousands of these financial firms out there who are being able to be financial technology firms who are being able to be funded. But as a result, you've got a lot of noise, and it's trying to filter through that. There's a lot of firms that are doing one thing really well, and that's great, but actually the world is more about kind of bringing things together. I think you'll see consolidation partially through the bigger incumbents buying out the smaller firms fast and cheap. I think you'll see mergers, so firms like ours merging with other firms like ours to build something much bigger and more important, or the ones that are starting to move a lot faster, acquiring some of the smaller players in the market that have either struggled because of the breadth of opportunity or just for whatever reason they struggled to really kind of get to where their potential is. So I think the ecosystem will evolve through consolidation. For us, we obviously want to be a key player in that consolidation, and that's really part of our forward-thinking plan.
Amazing. I think we'll end on that. And thank you so much, Matt. It was really fantastic for me to understand how data is the key to the problem, to so many challenges, right? And I wish you really all the very best to you and the SteelEye team on the journey.
Great. Well, thank you very much. I enjoyed the conversation.